Vincenzo's Gold Crypto Investing. I believe it's April 7th, 2025, noontime update under a pre-southwest wind out ahead of an approaching Arctic front and early to about mid-spring now, I would say, Arctic front pushing through the great state on Michigan this afternoon and evening just to make me freeze my a little behind off as we do our side job after we get out of our main job here at 3:30 Eastern, just north of downtown Detroit, inside the Vincenzo Mobile Compound, with a current official temperature under hazy, with some low clouds and peaking sunshine through 43 degrees. Jay. We ask you to bell notification, comment down below, like the channel, and share as the market is fluctuating violently with the tariffs coming out, the trade war in full effect, and markets are swaying drastically up for the most part recently, with some big bounces in between there. If we look at the stock market, it's down 1.6% today. The NASDAQ is down a 0.2. They've been down as much as 6% this morning, and they've rallied back. The S&P is almost at bear market, on the borderline of bear market territory. We're gonna have to put this on focus mode. But with all these fluctuations in the market because of existential government news, it's now more important than ever to become a member of Jabroni Killers for as cheap and as easy as $2.99 a month. You get the first mover advantage where you're prepared to make an educated and informed decision, and you get first mover advantage. And when you ask me questions on here, when you're a Jabroni Killer member, you get the first you get my utmost and first response. And I talk about you in the videos. Oops. I talk about you in the videos and answer your questions, and I'll text you I'll update you almost immediately. And then we talk about the videos. And we had one person in member of Jabroni Killers. We talked about some of the other ones last night, asking about the SPY or the S&P 500, right? And if we look at the S&P 500, he asked if we could bring this into our daily rotation, and we will. And we'll start off with it today as the tariffs have been negatively affecting the markets. And if you look at the weekly pattern, you can see we've been in just this ever ending since the 2008 and 1999 tech bubble. You can see the 1999 tech bubble was back here, and then we had the big fall. They started the printing presses and printed up into the Great Recession of 2008, 9, and 10, and then they printed their way out of that, and we've been printing ever since. On any kind of possible pullback, they fire up the printing presses, the metaphorical printing presses now. They expand the money supply, which inflates prices, and the prices that get inflated first and the fastest are in the financials and the stock market, right? And you can see just that never expanding bubble that just continues to blow higher and higher. You can see when they turned on the printing presses in 1999 and 2000, look at the volume in the stock market, because they're just buying the stocks, they're buying bonds, they're creating money. So you have all that money getting dumped into the stock market, forcing the price artificially much higher than it should. And when and if they ever stop, which they won't, you would have a violent crash like we've never seen before. But anytime it attempts to do it, which would actually be very, very painful, very, very bad, but very, very healthy at the end of it. But it would take a long time to work itself out. But every time it starts to go down, like in the 99 to 2000, and then the war hit, 51% correction, bear market. They printed out of it. Then you had the 2008, went down 59.21%. They printed their way out of it because they didn't want to see it. Then we had a brief in 2018. 2016, when Obama was running in a second term, we were showing flashes of recession. So they drastically started to cut interest rates and fired up the metaphorical printing presses again to get out of it. Then you had the COVID dump. They printed out of it. Then you had, when they were raising interest rates with Joe Biden as president, you were in deep correction territory, borderline bear market. So they stopped the lowering of the interest rates and paused, and then they started cutting his last year to pump it up even more. And that's similar to what they would do now if this price got down in the correction territory. And right now the S&P 500, I believe, if we go into, and we'll put some lines on here because we're going to keep this into our daily rotation. You can see this is a major support level, the double top from the 99 tech bubble through the double top that was the 2008 Great Recession triggered by the housing market crash. That's a major support level down there. So we'll put a little price label. Now, do I believe they would let it come down here? No, I don't. But that's a major support level. We like to identify support levels. So that $1,500 is a major support level. And then another major support level would be up here, where you had your top in 2019 and right about where that wick is for the bear market, where they started raising rates, and you had that little bit of a correction there. So that's a major support level there. So we'll make that one in yellow, right? So you have two major support levels here. You're in just this never-ending rising channel. And you can see every time we get near the 50-day moving average in the monthly, they start to print money, right? So we're just going to mark where these are because these are very important, and we're on a critical support level right now. You can see in the monthly time frame, usually we do the daily time frame, we're just above the 50 in the monthly time frame, right? Clone. Then the 100-day moving average, we're sitting right here, so we'll make that in blue. And then the 200-day in the monthly, we'll make that green. So you can see we haven't hit the green, the 200-day monthly, since the start of the rally on when we held it back in support for the first time in July of 2010. So it's been almost 14 years since we've hit the 200-day moving average in the monthly time frame in the S&P 500. It's been 2 years since we hit it in the 50-day moving average, but you can see every time we come down to the 50-day, that's when they start printing. When it gets below the 200-day, they massively cut rates to almost zero, and they fire up the printing presses. So I would think, looking at the technicals in the short term, there's probably likely to be a bounce soon because you're sitting almost directly on the 4640, which is the 50-day moving average in the monthly. So I think there's going to be a bounce there. There's going to be buyers there. And there has been, and there will always be buyers there. But if you don't get any buyers there, you would look at the 39.18 as a major support level that I think you would have a pretty nice bounce off of. But you can see today, even in the monthly time frame or in the daily time frame, you can see the volatile action. Actually, we're going to have to scooch in even closer here. Let's go into the 5-minute. You can see the big reaction that it had as you started having this dump this morning in the pre-market. Got very close to that 50-day moving average in the monthly. And then you had a nice bounce of 9% from where it was at its bottom to its top because you have that moving average that's sitting just below there. So there's a lot of buyers there. So I would expect some kind of a bounce here in the S&P, but we'll continue to follow that on a daily basis. And before this video gets too long, let's get into the crypto sphere. And the crypto sphere has also had volatile trading today because it hit that, look at that $73,811. We almost hit it to a T. We had our bounce at 74,300 and change, and we've been expecting this hit. We've been promoting it heavily, that we're in this head and shoulders with the first mover advantage, with the truth, trust, and education. We had the bearish cross. We told you we were only a few days away from having a golden bearish cross. The 200-day long-term moving average in green is now, you can see it clearly, is now starting to run parallel and even trending down. As you can see, the 200-day back here was at 85,789, and now the 200-day today is at 85,165. So it's starting to trend down. We're only a couple of days away from the golden bearish cross right here that we've been telling you about, where the 50 will be underneath the 200-day moving average. We've been promoting this head and shoulders topping out reversal pattern ever since we were back here in that double top, the all-time high double top. We're just going to put this smaller. We were showing you that head and shoulders. That picture has not changed. We just do that sometimes to bring it out. We've showed you at the first mover, we had a mountain double top. We had a local neckline here. So from the top of that double top all-time high to that horizontal neckline in blue to the point of a breakout, got you to 73,811, and that formed the peak of the head and the head and shoulders. That we were trading down to a mid ground before a brief consolidation as the bearish cross would happen simultaneously, and then the golden bearish cross, and that downside pressure would eventually force you down to the neckline, which is at 58,903 and change. The tariff news is just something that is expediting it, and the outside existential news and a manipulated criminal infested waters that is the stock and the stock market, the crypto market, and the equity markets. It's all manipulated at a perfect time to help drive the price down to this target. But with the first mover advantage, old Vincenzo's jabroni killers, that's the main reason to support the channel and industry cheap and best value, to help promote, push, and expand our rapidly fastest growing crypto station out there. By month now this year, we are massively expanding. We're on a big bull trend right now. We're at just under 2,000 followers, subscribers. We're on our way to 1,000 jabroni killer members. We're on our way to 10,000 subscribers to expand and force and change the crypto sphere to truth, trust, education, and information, which it should have always been, but we're going to make it as this channel is changing the game, and that's the power and the value and the reason you should support Vincenzo's Gold Crypto Investing. If you get anything out of this, become a member of Jabroni Killers. You can see an XLM is another one that we're very proud of. We've been promoting sits at 63-cent high, just below the 80-cent all-time high. We got short to medium-term bearish right there. We'll make this a bright orange, and then we're going to make this huge right there. You can watch every video since then, short to medium-term bearish. Then we outlined in a super simple and easy technical way to understand and trade this market. The 43 cents was the major bullish or bearish. That if we were above it and confirmed it was bullish, which we haven't been able to do this whole time, confirmed below it, which we've been, is very bearish. Then we said right here, and look at the spread, that we were going to have a bearish cross and a golden bearish cross, and we identified the 18 and 14 cent targets as long-term targets in the medium-term time frame. And now you can see we've had the golden bearish cross. We're about a day away, maybe 48 hours away from having the golden bearish cross, as the 50 is about to get below the 200. We've breached the 25 cents like we were talking about all last week and the week prior, as we had the manipulated pump here, and then we had a sympathetic bounce off a major support level there that we were going to break. That still do not want to buy you, and you're still bearish for my advertising on this station. We were coming down to 18 cents in blue, which has been drawn up there for 8 weeks now at the very minimum. Then we might have and should have some kind of sympathetic rally, possibly as high as the 30 cents, but at more than likely at least up near the 25 cents. And then that would probably get rejected in and around there. But classic hook nose bearish reversal. Then we would go down here, and we're going to lower this just to make it easier to see, and go into the red, which could have a much bigger bounce from a 14.5 cent low, which would have been from top, if it goes to 14 cents like we're predicting, a 76.69% prototypical textbook playbook dump after the massive pump where all the retail got fleeced, heisted, manipulated, and pushed. If they've never owned anything, as they were seeing it go up, to buy up here, when old Vincenzo was telling you not to buy up there, that is not the time to buy. The time to buy was the previous 2 years leading up to that pump, and there would be better buying opportunities in the medium term. And now we're into the future, and we're seeing better buying opportunities. But now that's what we're watching. We're trying to lay out the potential next leg to this, to where you come down to that 14 cents, and there could be a pretty substantial run. Not to say that's going to be the next leg of the bull market, but a pretty substantial rally off of a major downside 76% to 14 cents, where buyers are stacked there for multiple reasons. You had a lot of support and resistance, a lot of resistance here at that 14 cent level. If we look back here, see that on that purple? Look how many times it tried to hold it as support and kept failing and use it as resistance. You would expect it here now to hold it as major support and to have a major reaction off of that. The same thing with the XRP. We've been in this head and shoulders topping out reversal pattern. You can see we've had a low now of $1.62, almost down to our $1.29 target. We identified this with the value, and that's the value right there. of Vincenzo's Gold Crypto Investing, the truth, the trust, and the education, because every video you can watch since that green circle, which is early to mid-January, we have had this pattern drawn out, the head and shoulders that we're going to now just do this, which we do. And we identified the neckline down there in purple at 209, a major resistance level at 255, and that we were going to have a bearish cross. This is one of the last ones to do it, but we're only about 24 hours away from doing it, where that 50 is going to get below the 100. The 200 day is starting to trend parallel, and we'll start to trend down, and then we will eventually cross that with the 50 and have a golden bearish cross. We were eventually going to break the neckline and the 200, which we did. Now we're going to confirm below it. There could be a slight bounce like there has been this morning if we go into the hour time frame, and you would expect that. And you could see on a wick, you almost came back up to the neckline, and we talked about that last night, that there should be around that 200-day moving average or a wick below it, where you have a bounce back, and then maybe classic hook no bearish reversal, come back up now to that neckline, and instead of it being support like it's been, it turns into resistance. The overhead moving averages continue down, the bearish cross happens, and that drives you down to that technical target at $1.29. All things at about 9 o'clock tonight we will get into. Jabroni Killer members, talk to me. Let me know what you want to hear and see. Peace and love to my beautiful audience, the Rock Eyebrow J.